Consumer spending just jumped to 3.2%. But the reason might not be what you think. Good day everyone, welcome to the video of the day. Consumer spending just surged to 3.2%. The obvious read is that economy is booming. Americans are feeling confident, everything is fine. But the actual reason is a lot less flattering. Let's read past the headline. The headline number, which is very fascinating for few people. Let's go deep into it. So, Commerce Department's second quarter GDP report show that the US economy grew at 1.5% annualized rate, actually slower than expected and down from 2.1% in the first quarter. But inside the report, consumer spending, which makes up more than two-thirds of entire US economy, it's a jump of 3.2% rate, a sharp acceleration from just 0.5% growth in the first 3 months of this year. On the surface, that looks like genuinely strong signal. Here's why it's more complicated. So, what's the first reason? That is a one-time tax refund boost. The biggest driver isn't renewed economic confidence. It's a one-time tax refund windfall. IRS data shows that average tax refund this year came in around $3,276, roughly 12% higher than the last year, which is driven by provisions in the recently passed tax legislation. Even retail analysts track this directly, and the US taxpayers netted an estimated $35 billion in extra tax refunds through March alone, on a pace for roughly $50 billion in extra refunds for the full year. That's a real cash lending in people's bank account, but it's a temporary boost, not a sign of fundamentally stronger economy. As one retail analyst put that very plainly, that this is a temporary effect, but it has been very helpful. The second reason is the higher gas price inflating the number. Here's the part most headlines skip entirely. Some of that spending increase isn't people buying more, it's people paying for more same things because of the Iran war impact on the gasoline price. Since the conflict began, gas prices have risen roughly 40% and creating what Goldman Sachs estimates as a $140 billion annualized drag on household income at current level. Higher gas spending shows up in the same consumer spending number as genuinely discretionary purchase. But it's not a sign people are thriving. It's a sign that they are paying more just to fill up the tank. And this hits unevenly. Households in the lower income bracket spend roughly four times more of their after tax income on gasoline than the highest earner. That means that this strong spending headline actually represents real financial strain for lower income households specifically. What is a full picture, which is also investment angle? That here's the complete picture. According to Goldman Sachs' own analysis, the tax relief this year is being largely offset by higher gas cost, a genuine tug of war between a temporary windfall and a real ongoing expense increase. The report itself hints that the fragility here too. The tax refund season is temporary and fades after April, while gas price depend entirely on how long the Middle East conflict continues. Economists are already warning that if refund season's boost fades away, the gas price stays elevated. An underlying spending picture could look very different by the end of the year. To conclude, 3.2% spending growth, a genuinely good headline, built partially on one-time refund boost and partially on people paying more for gas, not buying more. So same number, very different story underneath it. Subscribe for more of this read past headline breakdown. Make sure you like the video. Share with friends, family, colleagues too. Welcome to Money Brief. Let's grow together.